China didn't fire a missile, it opened a bank. And that's just the beginning. In just 2 months, Beijing reshaped global finance without launching a single missile. Instead, it slashed its U.S. Treasury holdings to $760 billion, imported over 127 metric tons of gold, and expanded its financial footprint by opening new branches of the Asian Infrastructure Investment Bank, AIIB, in Hong Kong and Singapore. While Washington tries to cut China off from the World Bank, China is building its own global lending machine with its own rules, and nations are lining up to take the deal. The Empire of Loans. In April 2025, U.S. Treasury Secretary Scott Bessent quietly directed the Asian Development Bank to halt new loans to China. The goal? Restrict Beijing's access to international funding and curb its influence. China's answer? Escalation. Within weeks, the AIIB, China's answer to the World Bank, announced expansion into Asia's financial powerhouses. With over $57 billion in assets in 38 member countries, it's not just surviving, it's aggressively growing. And it's already committed more than $52 billion, largely in energy and transport, the same sectors once dominated by Western financial institutions. Instead of retreating, China is creating its own financial ring, and it's pulling countries in. A parallel finance system, Washington's play was to isolate China by demanding its removal from developing nation status at the IMF and World Bank. But China didn't blink. Flush with a $1 trillion trade surplus, it doesn't need Western approval. It's writing its own loans with fewer restrictions and quicker execution. The AIIB has already financed over 45 energy projects, many in Belt and Road countries. These aren't just loans, they're Trojan horses for Chinese tech, labor, and supply chains. Wind turbines from Vision and Sun, batteries from KTL or BYD, and construction by PowerChina. 90% of project funds are cycled back into Chinese companies. This isn't charity, it's strategic outsourcing with China at the center. Rewriting the rules. Unlike the World Bank, which requires competitive bidding and often drags projects through political red tape, China's financing model is fast, controlled, and deeply integrated with its domestic economy. Western governments call it debt trap diplomacy. But for many nations, Beijing's offer comes with shovels, not lectures. The choice is clear. Wait for conditional aid or accept turnkey solutions with built-in Chinese support. And with AIIB loans now being issued in Yuan, Beijing isn't just lending money, it's challenging the dominance of the US dollar. Currency warfare. In the first quarter of 2025, yuan-based international payments jumped 35%, the fastest pace since 2016. At the same time, China slashed its U.S. Treasury holdings and added gold to its reserves for the 18th consecutive month. April alone saw 127.5 metric tons of gold imported, despite prices hitting a record $3,500 per ounce. This isn't hedging, it's a financial firewall. Every loan written in yuan, every project repaid in yuan, and every ton of gold stashed away reduces China's vulnerability to dollar-based shocks. Now borrowers are not just hedging, they're getting used to yuan as their default financial tool. The U.S. on the sidelines. The U.S. holds no voting power in the AIIB. Meanwhile, China commands over 26%, enough to veto any strategic decision. That mirrors U.S. dominance at the IMF but flips the influence. And China isn't alone. Germany, France, and the UK are all full AIIB members, quietly undercutting Washington's push for a united front. World Bank President Ajay Banga recently acknowledged that reform can't move forward without major economic powers agreeing, yet some of those powers are already aligning with China. A growing divide. Back home, U.S. policymakers remain focused on pushing reforms and demanding transparency. But in the real world, solar fields are going up in Pakistan, hydro plants are operating in Central Asia, and fiber optic corridors are being laid across Africa, all powered by Chinese money, technology, and political alignment. When Washington talks about institutional reforms, Beijing talks about timelines and delivery schedules. That contrast is resonating worldwide. Retail gold fever. On the ground in China, the signal is clear. Consumers aren't lining up at banks, they're rushing gold dealers. In 2025 alone, China's central bank doubled its commercial gold import quotas. Retail and institutional demand has skyrocketed, even surpassing India's for the first time in 2 decades. The Shanghai Gold Exchange recorded 194.5 metric tons in withdrawals in April, the highest since 2021. China's Big Four banks are pushing gold accounts as standard financial products. This isn't just capital diversification, it's a message. Confidence in the dollar is eroding. Infrastructure or influence. A $100 million AIIB loan for a solar grid in Pakistan might look like clean energy investment, but over 84% of the funds went back to Chinese companies. This isn't aid, it's leverage. And once a country's infrastructure is tied to a single foreign supplier, options vanish. Fast loans, reliable delivery, and embedded Chinese tech. This is how Beijing builds long-term influence without firing a shot. So what happens next? If China starts pricing oil in Yuan, or if major exporters agree, the global economic order could shift overnight. While Washington raises walls with tariffs and policy demands, Beijing is building systems with banks, gold, and infrastructure. The US may still control institutions like the IMF, but China is writing the contracts that others are signing. What do you think? Is this economic warfare or just a smarter financial model? Drop your thoughts in the comments and make sure to subscribe and turn on notifications so you don't miss what China might do next, maybe even on the blockchain. Drop your thoughts in the comments and don't forget like and subscribe for the latest updates on global politics.